Okay, we'll get to all of those stocks in just a bit. But first, let's get the global conversation going with Ed Yardeni, president at Yardeni Research. Mr. Yardeni, great to have you with us as always. So it's, again, historic headlines coming out of Wall Street, and it's all about Nvidia. What do you make of, the rush that's still very much ongoing, the Magnificent Seven being led by this chip giant? I mean, do you think this is going to continue for a while longer?
Well, it certainly has continued for quite a lot longer than most people anticipated. I mean, the AI excitement all got started on November 30th, 2022. So that's when OpenAI introduced ChatGPT, and ever since then, anything related to AI, particularly many of the Magnificent Seven, have been absolutely on fire. And I think it may very well continue to move on. I mean, we basically have a melt up here, but what's interesting is it may very well be an earnings-led melt up rather than a valuation-led melt up, and an earnings-led melt up should be more sustainable.
Oh, that's interesting. This is an earnings-led melt up across global markets. I mean, that's something that the street always likes, right? Because at the end of the day, a bull market always rests on the back of corporate earnings. But do you see that to be the case in India as well? Because the earnings have picked up quite a bit. My colleague was just talking about how advanced tax collections have also gone up almost 30%. That's the data from last evening. So things are looking good back home in India. But as a global investor, would you put more money to work here?
Well, I think global investors are always looking for opportunities around the world. And I think many of them thought that China was looking particularly interesting because it got to be quite cheap, particularly relative to India and certainly relative to the United States. And there has been a bit of a rally over there, but it's kind of fizzled out. It seems to be faltering as there's a recognition that China's problems are more significant and aren't just going to go away just because the government or the central bank there is going to buy some apartments, which is one of the plans for trying to stabilize things. The property market is still in trouble over there. And I think as a result of that, when global investors are looking where to put their money, they're still finding India to very, very attractive. The economy is doing extremely well. And there's a lot of prospects that India is modernizing its infrastructure in a significant fashion. So I think that's all benefiting India.
Hi, Ed. Good morning and good to see you. Well, overnight we had the retail sales numbers that didn't look too good, and that's where the Fed tracker suggested that maybe we could possibly get a rate cut. I recall our last conversation where you said maybe we don't get any rate cuts. What are you factoring in now from the Fed?
I'm still in that camp. I still think that they will not be cutting rates this year. There's certainly no rush to cut rates. I know the retail sales number look weak, but let's not forget that some of that reflected prices rather than actual units. There was actually a decline in the CPI for goods of 0.1%. The Atlanta Fed puts together a GDP tracking model, and their model says the consumer spending in the second quarter is up 2.5%. That's a slight downward revision from 2.8%. So the consumers are still spending, and the Atlanta Fed model is still looking for 3.1% real GDP in the second quarter. So I don't see any particular reason why the Fed needs to lower interest rates if the economy is doing well and inflation is moderating.
Okay, a quick question before we let you go. Everyone's talking about Nvidia, right? But I think that story is played out. What's the next Nvidia, according to you?
Well, I think that the next Nvidia is the broader stock market. As you know, the stock market, especially recently, has been very narrow. I mean, just last week, the S&P 500 technology sector was up over 6%, and it was the only sector to beat the S&P 500. That's the first time it's only happened 4 times before. Let me put it to you that way. I think the market's going to broaden out. I think there's going to be a recognition that if artificial intelligence really is what it's made out to be, then the real winners are going to be companies that actually increase their productivity by implementing these technologies.
Okay, we'll leave it at that. Ed, thanks a lot for joining in. Appreciate your time here on CNBC-TV18. Well, that's the word coming in from Yardeni Research. But let's do one thing. Let's take a quick break. On the other side, our entire research team will be with us to help you with the top 10 stocks to watch out for. Stay tuned.